Hey everyone, welcome back to Crypto News with Gorilla Mansion. Today we're diving into the wild world of Bitcoin and its recent price action. Buckle up because it's going to be a bumpy ride. We've seen Bitcoin make some crazy moves this year, hitting all-time highs and then taking some pretty steep dips. So, what's in store for the world's most famous cryptocurrency? Is this just another dip before the next bull run, or are we staring down the barrel of a full-blown bear market? Over the next few minutes, we'll unpack 5 key things you need to know about Bitcoin this week, from technical analysis to market sentiment, and even some juicy macroeconomic data. By the end of this video, you'll have a much better understanding of the risks and potential rewards on the horizon for Bitcoin. Let's get started. Alright, let's talk about Bitcoin's recent performance. Last week we saw Bitcoin post its lowest weekly close in 4 months, and some traders are calling it a dead cat bounce. What does that even mean? Essentially, a dead cat bounce is a temporary price increase after a significant market downturn. It's like that moment when you think a falling knife has finally hit the ground, but then it bounces up slightly before continuing its downward plunge. Ouch. Now it's important to remember that not everyone agrees on whether this recent price action is a dead cat bounce or the start of a true recovery.
Some analysts believe that Bitcoin is simply consolidating after its massive rally earlier this year, and we could see it break out to new highs soon. However, others are more cautious, pointing to the fact that Bitcoin has failed to break through key resistance levels and is still trading well below its all-time high. So, is this a sign of further downside to come?
To get a better understanding of Bitcoin's current trajectory, we need to look at the technicals. And frankly, things aren't looking too pretty right now. One of the most concerning signs is the death cross that recently formed on the Bitcoin chart. This happens when the 50-day moving average crosses below the 200-day moving average, which is often seen as a bearish signal.
On top of that, we're also seeing a lot of bearish divergence on the Relative Strength Index, or RSI, which suggests that Bitcoin's momentum is waning. Basically, the RSI is saying that Bitcoin's price increases are getting weaker, while its price decreases are getting stronger. Not a good sign.
Now, technical analysis isn't foolproof, and there are always exceptions to the rule. But right now, the technicals are painting a pretty bleak picture for Bitcoin in the short term. So, what does this all mean for you, the average Bitcoin investor?
Well, first and foremost, don't panic. Remember, investing is a marathon, not a sprint. If you're a long-term holder of Bitcoin, this recent dip might actually be a good opportunity to accumulate more at a discount. Think of it like buying your favorite pair of shoes on sale. You're getting more bang for your buck.
However, if you're more of a short-term trader, you might want to proceed with caution. The market is looking pretty volatile right now, and it's important to have a solid risk management strategy in place. No matter what your investment strategy is, it's crucial to stay informed and make educated decisions based on your own research and risk tolerance. Alright, let's move on to market sentiment, which can be a powerful force in the crypto world. And let me tell you, things have gotten a whole lot scarier lately. Remember just a few months ago when everyone and their grandma was talking about Bitcoin? The Crypto Fear and Greed Index was sitting pretty in the extreme greed zone, and it felt like the party would never end.
Well, that party seems like a distant memory now. The Fear and Greed Index has plummeted a whopping 60% in the past month, diving headfirst into extreme fear territory. That's a pretty dramatic shift in sentiment, and it's definitely something to pay attention to. But why the sudden change of heart? Well, there are a few factors at play here.
One reason for the shift in sentiment is the recent activity of large Bitcoin holders, often referred to as whales. These whales have a significant impact on the market, and when they start selling, it can create a ripple effect that sends prices tumbling.
Data from blockchain analytics firms suggests that some whales have been taking profits recently, which could be contributing to the current market downturn. It's like when you see a bunch of people running towards the exit at a concert. You can't help but wonder if you should be running too.
Adding to the uncertainty is the fact that Bitcoin's hash rate, which is a measure of the network's computing power, has also declined recently. This is likely due to the crackdown on Bitcoin mining in China, which has forced many miners to shut down or relocate. This reduction in hash rate could make the Bitcoin network more vulnerable to attacks, which is making some investors nervous. It's like finding out that the security system at your favorite store is down. You might think twice about shopping there. So, how does this fearful sentiment actually impact Bitcoin's price?
Well, when investors are feeling scared, they're more likely to sell their assets and move their money into perceived safe havens like gold or government bonds.
This selling pressure can lead to further price declines, creating a self-fulfilling prophecy of fear and panic in the market. It's like when someone yells fire in a crowded theater. Even if there isn't actually a fire, the fear can quickly spiral out of control.
However, it's important to remember that market sentiment can change just as quickly as it arrived. What's driving fear today could be old news tomorrow, and we could see a sudden surge back into Bitcoin if the right catalyst emerges.
That's why it's essential to focus on the fundamentals of Bitcoin and the underlying technology, rather than getting caught up in the emotional roller coaster of the market. Let's dive into who's actually feeling the heat right now.
Investor cohorts who bought Bitcoin near its all-time high are now underwater.
Their investment is worth less than what they paid. You only lose money if you sell.
But it can create psychological pressure to sell, especially for those needing money short-term.
Even long-term holders, the legendary diamond hands, are starting to feel the pressure.
Investors who weathered the storms of 2018 and 2020 might be questioning their convictions.
When many investors are underwater, it can create selling pressure, driving down the price.
This is known as a capitulation event, a painful experience for everyone involved.
Let's talk about those diamond hands for a second. These are the investors who bought Bitcoin years ago when it was a fraction of today's price.
They've seen it all: the booms, the busts, the FUD, the FOMO. They're supposed to be immune to the emotional roller coaster of the crypto market.
But even diamond hands are human and not immune to psychological pressure. Seeing your portfolio drop significantly can cause anxiety.
Anxiety can lead to irrational decisions, like selling at the bottom of a dip. Many diamond hands will hold on, just like they have in the past.
They understand Bitcoin is a long-term game and short-term fluctuations are just noise.
Even a small percentage cashing out can impact the market. Think of it like a bucket with small holes. Eventually, it will start to drain.
The same can happen in the crypto market. So what does all of this mean for the future of Bitcoin? Well, it's hard to say for sure. As I always say, I'm not a financial advisor and this is not financial advice.
But I can tell you this. The fact that so many investors are underwater is not a good sign. It suggests that there is still a lot of potential for further downside.
However, it's important to remember that the crypto market is driven by sentiment. And right now, sentiment is extremely fearful. As we discussed earlier, the Crypto Fear and Greed Index is in the dumps. This means that investors are very pessimistic about the future of Bitcoin.
But here's the thing about fear. It's often irrational. When investors are fearful, they tend to overreact to negative news and sell their holdings at a loss. This can create buying opportunities for those who are brave enough to buy when everyone else is selling.
So, is now the time to buy Bitcoin? Again, I can't answer that question for you, but I can tell you that the current market conditions are creating some interesting opportunities for investors who are willing to stomach the volatility. Alright guys, let's talk about the economic data coming out this week and what it means for Bitcoin.
First up, we've got the Consumer Price Index, also known as the CPI. This measures the average change in prices paid by consumers for a basket of goods and services. Basically, it tells us how much inflation is happening in the economy.
Now, why does this matter for Bitcoin? Well, Bitcoin is often seen as a hedge against inflation. When the value of the US dollar goes down because of inflation, some investors turn to Bitcoin as a way to preserve their purchasing power.
So, if the CPI comes in hot, meaning inflation is still high, it could actually be good news for Bitcoin.
On the flip side, if the CPI surprises us with a lower than expected number, it could suggest that inflation is cooling off. This might lead the Federal Reserve to ease up on interest rate hikes, which could actually boost the stock market and potentially take some of the shine off Bitcoin.
Remember, when the Fed raises interest rates, it becomes more expensive to borrow money, which can slow down the economy. This can make investors more risk-averse, and they might pull back from riskier assets like Bitcoin. It's all connected, folks.
Next up on our macroeconomic data watch list is the Producer Price Index, or PPI.
Now, while the CPI measures inflation from the consumer's perspective, the PPI tracks inflation from the producer's side. It measures the average change in selling prices received by domestic producers for their output. Think of it this way. The PPI looks at the costs that businesses are facing for things like raw materials, energy, and labor.
If those costs go up, businesses might have to raise prices for consumers, which can lead to, you guessed it, inflation.
So, why should we care about the PPI when it comes to Bitcoin? Well, it gives us a glimpse into the future of inflation. If the PPI is rising, it could be a sign that inflation is going to stick around for a while, which, as we discussed, could potentially benefit Bitcoin.
However, if the PPI comes in lower than expected, it might mean that inflationary pressures are easing, which could lead to a less favorable environment for Bitcoin in the short term. Last but not least, we have the big kahuna of economic events this week, testimony from Federal Reserve Chair Jerome Powell.
Now, whenever Powell speaks, the markets listen. Why? Because he has a huge influence on monetary policy, which, as we've discussed, can have a ripple effect on everything from interest rates to inflation to the stock market. And yes, even Bitcoin.
Investors will be hanging on Powell's every word, looking for clues about the Fed's plans for interest rates. Will they continue to raise rates aggressively to combat inflation, or will they signal a pause or even a pivot towards easier monetary policy?
If Powell sounds hawkish, meaning he's still worried about inflation and suggests more rate hikes are coming, it could spell trouble for Bitcoin. But if he strikes a more dovish tone, hinting that the Fed might ease up on rate increases, it could be a positive sign for risk assets like Bitcoin.
Buckle up, folks, because this week could be a wild ride. Let's talk about market sentiment, or more specifically, the Crypto Fear and Greed Index. This index tracks various factors like volatility, market momentum, and social media sentiment to gauge how fearful or greedy investors are feeling about the crypto market.
Now, remember a few weeks ago when Bitcoin was hitting all-time highs? The Fear and Greed Index was deep in extreme greed territory. Everyone was feeling euphoric, FOMO was running rampant, and it seemed like Bitcoin could only go up.
But as we know, what goes up must come down.
Fast forward to today, and the sentiment has done a complete 180. Bitcoin is down significantly from its highs, and the Fear and Greed Index has plummeted into extreme fear. Investors are feeling anxious, uncertain, and some are even panic selling.
It's a classic case of market psychology at play. Is extreme fear a buying opportunity? So, what does this extreme fear mean for the future of Bitcoin?
Well, contrarian investors would say that extreme fear is actually a good thing, a sign that the market has bottomed out and it's time to buy the dip. After all, the old adage in investing is to buy low, sell high, right? When everyone is fearful, it often means that the market has already priced in the bad news and there's less downside risk. Plus, when sentiment is this low, it doesn't take much positive news to spark a rally.
However, it's important to remember that market sentiment can stay irrational longer than you can stay solvent. Just because the Fear and Greed Index is flashing extreme fear doesn't mean that Bitcoin can't go lower. The truth is, trying to time the market based on sentiment alone is incredibly difficult. It's like trying to catch a falling knife. You might get lucky, but you're more likely to get hurt.
Instead of trying to predict short-term price movements, it's usually a better strategy to focus on the fundamentals. Is Bitcoin still a revolutionary technology with long-term potential? Do you believe in the future of decentralized finance? If the answer is yes, then don't let short-term market sentiment shake your conviction. Remember, Bitcoin has gone through cycles of boom and bust before, and it's always come out stronger on the other side.
That's it for today's video. If you found this information helpful, make sure to hit that like button and follow or subscribe for more updates. Let me know in the comments what you think will happen to Bitcoin next. See you in the next one.